Hey, welcome back everybody. You're tuning in to howtoplaystock.com. My name is Kepley. In today's video, I wanted to cover gold. All right, and the reason why, again, is because we've got so many geopolitical tensions that are starting to show and rear their ugly face right now. Not to mention, you got the stock market at all-time highs, which means that the overall indexes are overvalued. So you want to stay away from getting in at the top, you know, and then having everything come crashing down on you and you lose money. So I'm looking more at better investments right now outside the stock market and getting away from paper assets. The reason why is because you have this US dollar, which is fiat currency. It's backed by nothing, and all other currencies around the globe are a fiat currency as well. And if you study Keynesian economists, okay, people like Ben Bernanke, Janet Yellen, any of the people that head up the central banks, they study Keynesian economics, all right? And the theory behind that is a debt-based model. So you have to have debt in order to keep the system going. And right now, with the U.S., you need $4 of debt for every $1 that's created. Okay, now, I don't know about you, but for people like you and I, if we lived our lives that way, and most of us are at this current moment when it comes to credit, you know, if you live your lives in $4 of debt to every dollar that you earn, you'll know that's unsustainable. Okay, so with it being unsustainable, you wanna basically keep that in mind when I go through and I talk to you about the 10 reasons why you want to own gold. Okay, now, what brought this up was I was reading a pamphlet that I got from one of my first investments, okay, and that's from Midas Resources, and you can see the title there. It says 10 reasons why you want to own gold. So I'm going to go through those, but before I do, I wanted to just break down what, you know, some of the ways you can invest in gold. Now, if you follow my channel, you'll know that, you know, I really emphasize on owning physical metals, because it's outside the system. It can't be manipulated. When I say manipulated, it can't be, it's outside the system, okay? So when you buy the gold, it's physically yours. You own it. Nobody can get their hands on it and, you know, control the price through a piece of paper. And what I'm referring to here is stocks that track the price of gold and silver, like SLV and GLD, okay? Those, I mean, you can day trade those if you want, but as far as holding on to them long term, I would say that's probably a bad idea, because they're paper contracts, and the amount of physical gold, let's say you wanted your physical gold and you wanted to redeem your gold that you own through paper. If you took that contract and you took it out and you said, hey, I want my gold back in physical form, they wouldn't have it for you, because they've created so much of these paper contracts, okay? There's not enough gold to meet the demand behind those paper contracts. So that's why I understand when I'm looking at GLD and SLV, they're paper contracts, they're garbage, they're good for maybe day trading, you know, especially if the physical price goes up. A lot of times that'll follow right behind it. So you can make some good trades with them. But I wouldn't hold on to them and consider them like a safe haven asset, because they're paper assets. All right, they're tied to a manipulated market. And when I'm saying manipulation, you know, if you haven't subscribed to my channel, just subscribe to my channel. Go back and look at a couple of videos where I talk about the manipulation on silver. Okay, and you'll know what I'm talking about here when I say that the price is being manipulated through the paper contracts. Now, that can't go on forever. All right. So getting back to the point here with investing in gold, you can go with the paper contracts if you want. If you're going to do that, I'd get in and out. But other than that, you can physically own metal. So for instance, like with gold, I've got, and this is just my own strategy for investing in gold. I go with gold by the gram. So there's these little 1 gram bars. I've got a 1/4 ounce of gold right here. You can go higher. You can go with a 1/10 ounce. You can go with a 1/2 ounce or a full ounce of gold. You can go with gold bars. And you just have to go out and do a little bit of research on on how much you want, but you have several options there when it comes to investing in gold. All right, now I'm shooting this video on Tuesday night, April 26th, so I'm going to give you the spot price of gold right now. It's probably going to change by tomorrow when you're watching this, but as of right now, it's $1,270.50. Now, if you want to know the price by the gram of gold, what you do is take the spot price, you divide it by 31 grams, and that's going to give you the price per gram. Now, you have to include, when you're buying physical metals, you have to include the premium in your purchase price, or whatever the spot price is. So if you know, go by the gram, whatever that value is, you know, when it's divided by 31, add the premium in there on top of that, and that's your real price that you're going to pay for gold, okay, at that time. Now I'm going to cover the 10 reasons to own gold real quick. Number one, global currency debasement. Now, I'm reading this. This was printed. Let's see here. I'm trying to find a date. This would have been printed at least 4 years ago when I bought my first metals. So the information is a little outdated. But what's interesting about it, as I'm reading, keep in mind this was from 4 years ago. Okay, so the number one reason to own gold is global currency debasement. The U.S. dollar is technically very weak and should fall dramatically. Other countries are very reluctant to see their currencies appreciate and are resistant to the fall of the U.S. dollar. Thus, we are in the early stages of a massive global currency debasement, which will see tangibles, most particularly gold, rise significantly in price. Number two, investment demand for gold is accelerating. When the public recognizes what is unfolding, they will seek an alternative to paper currencies and financial assets, and this will create an enormous demand for gold. Number three, alarming financial deterioration in the U.S. The current amount of the deficit has reached levels which have portended currency collapse in virtually every other instance in history. Right now, what are we at? Almost $20 trillion. Okay, so that's unsustainable. And if you remember what I said, for every dollar that's printed, $4 have to be created in debt to keep the whole thing going. So, you know, paying off the national deficit is just, it's not going to happen. Number four, negative real interest rates in reserve currency or U.S. dollars. To combat the deteriorating financial conditions in the U.S., interest rates have been dropped. So, to combat the deteriorating financial conditions in the U.S., interest rates have been dropped to rock bottom levels. Real interest rates are now negative, and according to statements from the Federal Reserve, are expected to remain so for some time. All right, how long have we been at almost 0% interest? What, a decade? Going on a little bit over that? I mean, I don't see them raising it, you know, more than maybe 1%. Okay, because if they do, with the national debt being at almost $20 trillion, we're not going to be able to pay the interest on that $20 trillion. There have been very strong historical relationships between negative real interest rates and stronger gold prices too. Number five, dramatic increases in money supply in the U.S. and other nations. U.S. authorities are terrified about the prospects for deflation given the unprecedented debt burden at all levels of society in the U.S. Now, Ben Bernanke, he's on record saying this. He said the Fed has a printing press and will use it to combat deflation if necessary. We had quantitative easing 1, 2, and 3. 2008, we had deflation. What they do? They panic. They use the print press. Other nations are following the U.S.'s footsteps, and global money supply is accelerating. Okay? Look at Europe. You know, the ECB, they're still doing their stimulus. So, you know, other countries are following suit, firing up the print presses. So this is not just a problem here in the U.S. It's going to be a problem everywhere because, number one, you got the U.S. dollar, which is it's the global reserve currency, okay, for international trade, especially with oil. The petrodollar, we'll get into that at a later date, but that has a lot to do with it. Number six, central banks are nearing an inflection point when they will be reluctant to provide more gold to the market. So Far Eastern central banks who are accumulating enormous quantities of US dollars are rumored to be buyers of gold to diversify away from the US dollar. Now, this is written at least 4 years ago. China is one of the biggest buyers of gold out there. They've been hoarding gold for years now and are one of the biggest buyers of gold on the global markets. Okay, so that stands true as well. Number 7, gold is increasing in popularity. Prominent developing countries such as China, like I just said, India and Russia have been accumulating gold. In fact, China, with its 1.3 billion people, recently established a national gold exchange. All right, demand in China is expected to rise sharply and could reach 500 tons in the next few years. And I would say that's pretty much come true. Number 8, gold as money is gaining credence. Islamic nations are investigating a currency backed by gold, specifically the gold dinar. The new president of Argentina proposed during his campaign a gold-backed peso as an antidote for the financial catastrophe which his country has experienced, and Russia is talking about a full convertible currency with gold backing. Now, if you look at what happened with the SDR, the special drawing right, China was introduced to that just recently. And you have the BRICS nations that was created, all right, which is Brazil, Russia, India, and what's the other one? Singapore, I want to say. I could be wrong on that. I have to go back and look at it, but it's the BRICS nations, it's the Eastern nations that are creating their own central banking system, and they're talking about, having it backed by gold. All right, now I don't know if that's what Russia was referring to here, but that has a lot of there's a lot of truth behind that statement there. Okay, number 9, rising geopolitical tensions. The deteriorating conditions in the Middle East, the U.S. occupation of Iraq, the nuclear ambitions of North Korea, and the growing conflict between the U.S. and China due to China's refusal to allow its currency to appreciate against the U.S. dollar headline the geopolitical issues which could explode at any time. All right? A fearful public has a tendency to gravitate towards gold. Historically, this is true. All you have to do is go back and do a little bit of research on Weimar Germany. All right, I'm going to leave a link in the description here from Mike Maloney. He shot a great video on what happened in Weimar Germany when it comes to, the geopolitical issues that arose, what the central banks did. And these guys were Keynesian economists. All right, they studied Keynesian economics. You're gonna see when you click on the link that I'm going to leave in the description, you're going to see what they did to their currency. And it hasn't changed, okay? Nearly 100 years later, it has not changed. Their model is still the same. With the rising geopolitical tensions, look at North Korea, okay? They mentioned that right here. We're getting ready to go to war, possibly nuclear maybe, with Korea. So, that's a great reason to own gold in itself, just off of number 9, which is rising geopolitical tensions. And then, last but not least, number 10, limited size of the total gold market provides tremendous leverage. So what they're talking about here is all the physical gold in existence is worth somewhat more than 1 trillion US dollars, while the value of all the publicly traded gold companies in the world is less than 100 billion. All right, and that's in US dollars. When the fundamentals ultimately encourage a strong flow of capital towards gold and gold equities, the trillions upon trillions worth of paper money could propel both unfathomably to unfathomably high levels. All right, so that's the 10 reasons why you'd want to own gold. Outside of the paper contracts I was talking about, you can also invest in the mining industry. Now, long term, when it comes to what does better, mining stocks or actual gold. I actually shot a video on that, so you can subscribe to the channel and go check that out if you want. And just to give you, an idea of which one performs better, gold, owning physical gold, actually performs better long term over gold mining stocks. But you can get involved with the mining stocks short term And if you get involved with the right ones, you can make a lot of money really fast, especially if you get in at the right time when gold is going up. Okay, so that's another way you can invest in gold. Other than that, that's all I have for today. These are today's investors investing tips. You're tuning in to howtoplaystock.com. Again, go ahead and like the video if you found the information interesting or beneficial. Go ahead and share it with others. If you haven't subscribed to the channel, go ahead and please do so. And until next time, guys, remember, income's the outcome. I'll talk to you later.